Now, recently, a lot of the central banks in the world have been buying gold. In fact, they've been buying more gold now in the last 12 months than probably any time since the early 70s. Why are central banks?
Over the past few months, the price of gold has been going haywire. You can see it on this chart. As the coronavirus pandemic took hold in March,
like no other, it is beautiful, desirable, rare, and valuable.
From ancient civilizations to modern economies, gold has stood the test of time. But is it still relevant in our digital age? Spoiler alert, it's more important than ever. Hey there, money mavens and curious investors. Welcome back to our channel. Today, we're talking about something that's been catching the eyes of investors and central banks alike: gold. So, let's dive in and discover why you should be considering this precious metal right now. So, why all the fuss about gold right now? Well, it's not just because it's shiny and pretty. Let's break it down.
Essentially, gold tends to perform well during economic uncertainty.
1. Economic uncertainty. First up, we're living in some pretty crazy times, economically speaking. The global economy is like a roller coaster, ups, downs, and some serious loop-de-loops. We've seen a global pandemic, trade wars, and now inflation is rearing its ugly head in many countries. In times like these, investors often turn to gold as a safe haven. Why? Because gold has been valuable for thousands of years, and it's likely to stay that way. It's like the sturdy old oak tree in a forest of saplings. It's been around, and it's not going anywhere. Think about it this way. Empires have risen and fallen. Currencies have come and gone, but gold has always held value. The ancient Egyptians were buried with it. The Spanish conquered continents for it. And today, it's still a crucial part of the global financial system. That's some serious staying power.
Gold is moving up. That's bad news for future inflation.
2. Inflation hedge. Next, let's talk about the I word that makes everyone's wallet shudder: inflation. You know, when your dollar buys less and less over time, well, gold has historically been a great hedge against inflation. While the value of paper currency can fluctuate wildly, gold tends to hold its value over the long term. It's like having a financial superhero in your portfolio, fighting against the villainous forces of inflation. Let's put some numbers to this. In the US, the average annual inflation rate over the past century has been about 3%. That means something that cost $100 in 1920 would cost over $1,300 today. But guess what? An ounce of gold that cost $20.67 in 1920 is worth over $1,700 today. Gold hasn't just kept pace with inflation. It's outpaced it significantly.
China is on a gold buying spree. For the past 18 months, the People's Bank of China has been steadily accumulating gold.
3. Global demand. Now, let's take a trip around the world. Did you know that India and China are absolutely crazy about gold? In India, gold is deeply ingrained in the culture, used in everything from weddings to religious ceremonies. In fact, Indian households are estimated to hold over 25,000 tons of gold. That's more than the gold reserves of the United States, Germany, Italy, France, Russia, and China combined. Talk about a gold rush. In China, the government has been encouraging its citizens to buy gold as a way to diversify the country's foreign exchange reserves. And it's working. China is now the world's largest gold market. The Chinese New Year in particular sees a huge spike in gold purchases as people buy gold jewelry and coins as gifts. And it's not just individuals who are gold crazy. Central banks worldwide have been on a gold buying spree. In 2022 alone, central banks bought a record 136 tons of gold. That's the weight of about 200 elephants. Countries like China, Russia, and Turkey have been leading the charge. But why?
The US dollar has had the reserve currency status for nearly 80 years.
4. De-dollarization. Here's where things get really interesting. There's a growing trend called de-dollarization. Basically, some countries are trying to reduce their dependence on the US dollar. Remember how we mentioned earlier that the US dollar has been the world's reserve currency? Well, some nations are starting to diversify their holdings, and gold is a big part of that strategy. This trend got a major boost in 2022 when Western countries froze Russia's foreign currency reserves as part of sanctions over the Ukraine conflict. This move sent shockwaves through the global financial system, making many countries realize they might need a plan B for their reserves. And what's the plan B? You guessed it, gold. Why gold? Well, it's nobody's liability. Unlike a currency, which is essentially a promise from a government, gold is valuable in and of itself. It doesn't depend on any country's economic policies or political stability. In a world of increasing geopolitical tensions, that's a pretty attractive quality. 5. Limited supply. Here's another fascinating tidbit. We might be running out of gold to mine. Some experts believe that we've already mined about 90% of the world's discoverable gold. Unlike paper money, which can be printed at will, there's a finite amount of gold in the Earth's crust. This scarcity factor could drive up prices in the long term. To put this in perspective, all the gold ever mined in human history would fit into about 3.5 Olympic-sized swimming pools, and we're finding less and less each year. In fact, despite advances in mining technology, gold discoveries have been declining since the 1980s. Some geologists predict we could hit peak gold, the point at which gold production reaches its maximum rate, within the next few decades. 6. Portfolio diversification. Now let's talk about your investment portfolio. You've probably heard the saying, don't put all your eggs in one basket, right? Well, gold is like a completely different type of basket. It often moves independently of stocks and bonds, which means it can help balance out your portfolio when other investments are struggling. For example, during the 2008 financial crisis, when the S&P 500 fell by about 37%, gold prices rose by about 5%. And during the COVID-19 market crash in March 2020, while stocks were plummeting, gold held relatively steady. It's like having a financial airbag. It might not prevent a crash, but it can certainly soften the blow.
Gold prices reached a new all-time high in today's and yesterday's trading sessions.
7. Geopolitical tensions. Lastly, let's address the elephant in the room. Geopolitical tensions. Whether it's trade wars, actual wars, or political upheavals, these events can send shockwaves through the financial markets. During these tumultuous times, gold often shines, pun intended, as investors seek out safe haven assets. Just look at what happened when Russia invaded Ukraine in 2022. As uncertainty gripped the world, gold prices surged to near record highs. It's not that gold likes conflict, it's that in times of uncertainty, people crave stability, and gold has been a symbol of stability for millennia. But hold on a second, before you go selling your house to buy gold bars, let's pump the brakes a bit. Like any investment, gold has its pros and cons. It doesn't generate income like stocks or bonds, and its price can be volatile in the short term. Plus, storing physical gold can be a hassle. You can't exactly keep gold bars under your mattress. Well, you could, but we wouldn't recommend it. So, what's the sweet spot? Many financial advisors suggest allocating about 5 to 10% of your portfolio to gold. This gives you exposure to its benefits without putting all your financial eggs in the golden basket. Now, you might be wondering, how do I actually invest in gold? Great question. You've got a few options. 1. Physical gold. This includes coins and bars. 2. Gold ETFs. These are funds that track the price of gold. 3. Gold mining stocks. These are shares in companies that mine for gold. 4. Gold futures. These are contracts to buy or sell gold at a future date. Whichever method you choose, make sure to do your research and consider consulting with a financial advisor to see how gold fits into your overall investment strategy. Before you make any investment decisions, take the time to educate yourself. Read books, follow reputable financial news sources, and maybe even take an investing course. Remember, the goal isn't to get rich quick. It's to build long-term financial stability and security. Gold has been a part of that equation for thousands of years, and it looks like it'll continue to play a role in the future of finance. If you found this video helpful, don't forget to hit that like button and subscribe for more financial insights.